Hello everyone, welcome to the breakdown on EU. In today's breakdown, we'll be discussing the importance of having conviction in your trade idea and not changing it or letting go of it because of a single loss. I will also discuss how this conviction is built, and moreover, we will also discuss how to change your narrative when bias at the correct time. So, let's get ahead and let's start off the breakdown on the weekly time frame. So on the weekly time frame, you know that first of all, we're going to start off with determining our directional bias and our drawn liquidity on the higher time frame. Now you know that we've got two types of directional biases or drawn liquidity. First of all, we have to determine our long-term drawn liquidity, and then after that we have to determine our short-term drawn liquidity. And you know that both of them are important because they let us know exactly which way we have to position ourselves both on the higher time frame and on the lower time frame. Now for the long-term drawn liquidity, our directional bias is pretty clear. It's towards the upside, and the draw for price is this 3-month CRT high right here, right? That is our long-term drawn liquidity. Now we're going to look for price to expand towards that long-term drawn liquidity after the short-term drawn liquidity is reached and met. Now the question is, where is that short-term drawn liquidity at, right? And the answer to that can be found through the following narrative. So you can see that last week a new monthly candle opened, right? And based on the open high low close concept, we know that the way how a candle moves is basically it moves in quarter, right? It first of all starts off with generating liquidity in the first quarter of the candle, or basically in this case the first week of the monthly candle, and then the second week is where usually the manipulation happens and the low of the candle or the low of the month is formed, and then the rest of the month we expand higher towards the long-term drawn liquidity to form the high of the month. Now you can see right here that even this month what happened is that for the first weekly candle we formed this ranging candle right here, and with this ranging candle we also rejected below this low because we are in a bullish order flow. So this candle right here, this weekly candle right here, rejected below a low, right? And this is the first week of the monthly candle or of the month, and basically it formed and generated liquidity, right? And the other thing is that our long-term drawn liquidity is higher. So based on these factors, we can regard this weekly candle as our weekly candle range or our weekly CRT. Now we know that before price starts expanding higher, it has to first of all purge this CRT low, right? And only then it will start moving higher. And exactly due to this narrative right here, I took this CRT low as my short-term drawn liquidity because price hadn't purged it yet, right? This week. So what I did is I took this weekly CRT low as my short-term drawn liquidity for price to purge it, and only then it can start moving higher. Now I'd start looking for bullish trade ideas after this is purge. Not only after this is purge, but also I'd wait for a confirmation in the form of a 4-hour or a daily CSD or change in the state of delivery, right? Once that happens, then only then I'd start looking for bullish trading ideas towards the long-term drawn liquidity, right? Now remember, I won't start looking for bullish trade ideas straight away once the CRT low is purged, right? But instead I'd wait for a daily or a 4-hour CSD confirmation to confirm my bullish trade idea, and only then I'd have conviction in this idea to start forming or generating trade ideas on the lower time frame. Now the point is that I determine my short-term drawn liquidity to be this weekly candle range low right here, right? That is how I determine my drawn liquidity on the weekly time frame, both my short-term and my long-term. Now let's go down to the daily time frame to see what else we got there. On the daily time frame, we've literally got the same thought process, right? We rejected below the low in a bullish order flow, and now the short-term drawn liquidity is first of all for price to purge the weekly CRT low, right? And that is basically our short-term drawn liquidity, and my objective is to look for bearish trade ideas towards that short-term drawn liquidity, right? What you can also see is we've also got this low perfectly aligned with that low, right? So that is another confluence on top for us, right? That's exactly how I determine my drawn liquidity and my directional bias for the day on Tuesday. Now let's go down to the 4-hour time frame to see how did I select my CRT there and how did I position myself in a CRT. Now on the 4-hour time frame, we already know that what our short-term dawn liquidity is, right, which is this low. So my objective on the 4-hour time frame would be to find a CRT or a candle range towards this low so that I could position myself there. What you can see right here is that the Tuesday daily candle opening right here, right? It opened right here. And during the first half of the day, during the CBDR in the Asian session, we basically ranged and consolidated inside this 4-hour ranging candle, and we formed the Asian range inside of it. Now, based on time-based narrative, I expected an intraday normal protection profile to occur here. And what I expected is I expected for price to punch the CRT high, and then I wanted to look for reversal trades from there, right? That's exactly where I also wanted the high of the day to be formed after this CRT high spurts, right? And another thing is I wanted this high or this CRT to be purged during the London open zone, which is a key time, so that would be another confluence on top. I took this as my CRT, and once it was purged, I decided to look for short entries after that, right? And you can see price did purged it, and then after that it formed the high of the daily candle there and then expanded and reversed lower after that. Now let's go down to the 15-minute time frame to see how did I framed an entry there based on intraday profiles in my entry model. So on the 15-minute time frame, you can see the opening and closing times for Tuesday, and you can see the Asian range right here just below the CRT high, the 4-hour candle range high. I was waiting for it to be purged at the London open zone, and right here you can see that it got purged here for the first time, and once it was purged, after that I decided to look for a model 1 entry right here, and you can see that we've got one order block entry right here. I took an entry there, but you can see that price straight away went above to take me out. But the thing is that I still had conviction in that trade idea, in this whole analysis that I had built, right? And also with this move higher, with this expansion high, we also reached the 50% of the daily FEG, right? So that was another key level as a confluence there. And after this happened, I decided to wait for another entry to form in the form of an order block entry, and we got it right here after price closed below this candle. And what I did is I put my limit order at the order block low with my stop loss above the order block, and I targeted 3R in the opposing end of the range, right? Those were my two entries for Tuesday. The first one ended up with a loss, my minus 1 hour loss, but I still had conviction in my trade idea. That's why I took another one there as well, and that one turned out to be a winning trade with plus 3R profits, and with that I ended the day with 2R profits. Those were the two trades I took on Tuesday.